now we already have 2 people recording. So first...
You won't be able to talk because he's recording, just so you know.
No problem. First topic on the agenda, as I already said, Max and Tom from Charm Finance will introduce their project. If you have any questions for them, you can always write in one of the 2 community call chats. So either the Uniswap.com call TC, which stands for text chat, or you can use the June 30th text chat also to write your questions and comments or whatever. If Popsicle Finance guys could spam a little less, then I could catch all the questions. Take it away, guys.
Yeah, sure. So firstly, thanks a lot for inviting us. It's really good to be here. So with the Charm team, and we're working on AlphaVaults, which is a liquidity manager built on top of Uniswap v3. So in short, what that means is that it's a super easy way to deposit into Uniswap. So you can deposit your funds into the vault and it will actively manage your positions for you. The first version of AlphaVaults was just designed to be super simple, and its main aim was just to launch it as quickly as possible. And so it actually went live very early on. Actually just 2 days after Uniswap v3 launched, then AlphaVaults went live. So at that time, people were already able to deposit into AlphaVaults and have their positions actively managed for them. And since then, in the last 2 months or so, then AlphaVaults has been running smoothly and it's been performing pretty well. And we've been working on trying to improve the vault and research better strategies. I'm happy to take any questions or to go into more detail about how the strategy works.
I just like to add that. So just echo Max's what Max has mentioned. So first of all, thanks very much for giving us the opportunity to speak to the Uniswap community. So it really is an honor. So for the both of us. Just in addition to Max has just mentioned. So basically the way that we approach managing rebalancing LP positions is just to basically think about a kind of both sides of the LP equation. In terms of both maximizing fees and minimizing impermanent losses. And our strategy is, and our whole strategy is designed in such a way that to maximize the total returns that our depositors will have when taking these opposing factors into account. You can kind of like to think of it as like a double-edged sword or a modern day Darth Maul lightsaber, if you like. If you want, the wider the positions, the larger that your fees will be, but also the larger your impermanent losses will be, i.e. your capital loss. So you're gonna have to. So we are kind of thinking about how to find the best balance to give the best total returns for our depositors.
Okay, so my first question is the balancing done automatically, or you guys manage it somehow, like trigger it, set limits that you think, or there's an automatic strategy that manages it?
Yeah, there is an automatic strategy that's all on chain, and there's a method that needs to be called by a keeper every so often. And at the moment we just have a bot running which does this automatically, which just calls this method. So it doesn't feed any calculations on chain. All the calculations are done in the strategy contract on chain. I think in the future we'd want to move the triggering of the rebalance onto a keeper network or so that is done in a more decentralized way.
Out of curiosity, is there any MEV incorporated into this product at all yet?
Sorry, what do you mean by that?
Market value. So zero gas, you pay a minor bounty and get included into the block.
Oh, that's not something we've looked at yet, actually.
Okay, just curious.
So can you guys give us a simple overview of what the strategy is? So obviously you try to stay in range and maximize the fees earned, but how do you guys do that?
Sure, yeah. So one of the challenges is like balancing your inventory. So like on Uniswap V2, then the values of the two tokens in your position like is always 50-50. But in V3 it's different. Like as the price moves, then it would go away from 50-50. And yeah, if it goes like out of the range, then you'll be left like just holding one token. So the biggest challenge is like how to rebalance your balances like back to 50-50. And I think this is like one area where there are like many possibilities to be creative and many different like ways to do the rebalance. Kind of the simplest way is just to do a swap on Uniswap to swap one token for another. And the downside of that is that you have to pay the swap fee to do this. So like typically that's like 0.3%. And although that seems small, like if you do that every hour or every day, then that'll compound over time and it will eat into your returns. So kind of the key feature of our strategy is to avoid doing the swap. So we call it like passive rebalancing. It rebalances by placing a limit order instead of by doing the swap. And then the benefit of it is that it doesn't have to pay the swap fee, and it doesn't like lose value through price impact. The downside is that it's not guaranteed to go back to 50-50 immediately. It's just like probabilistic, like it's more likely to go back to 50-50. And like from backtest, we found that this does outperform rebalancing through a swap. Yeah, so that's kind of like the unique feature of AlphaFolds. It does rebalances through limit orders.
Okay, so if I understand correctly, your strategy is basically to always have like a 50-50 position. And which pools do you guys participate in? Is there like a limit, or you support any of the assets currently on the Uniswap V3?
At the moment, it's only ETH USDC and ETH USDT, but and we wanted to start with the biggest pools because there's kind of a worry if the pool is too small and if the vault is like a big percentage of the pool, then there might be some way to like game the vault and for like other traders to take advantage of it. So we wanted to start with the biggest pools, and then yeah, we're researching and we want to expand to other pools as well.
Okay, and I see some comments in the text chat that your pools are currently full, and audience from this community call at the moment can't send some liquidity your way, so you guys manage it. Is that correct, or?
Yeah, so actually until today we were unaudited, so that's why we had like a pretty low cap. I think it's like around 500k per pool. But today actually our audit was completed, so we're hoping to remove the cap or increase the cap and to launch more vaults very soon.
Okay, that's great news. I see some questions about. So the vault is a smart contract. It's not. It's not custodial. So it's not like an address or something. It's a smart contract that holds the funds and manages it.
Yes.
Okay, yeah. Like a natural question is, does your protocol have a token? Is it, is there a token associated with your protocol?
So we don't have a token yet, but we're hoping to also launch one so very soon. Our priority over the past few weeks over the past few weeks and months have been on alpha votes and deliver a stable and high performing vote to maximize total returns, and also to lift the cap as soon as possible. So now that the audit is finished and the cap will be lifted soon, so the next priority will be our token launch.
Okay, and how the future token will be integrated with the protocol? Will it take like a portion of the profits, or?
I think the most obvious first step is liquidity mining. Once we have delivered a stable product that has outperformed so consistently, which it has over the last 2 months since our proposed conception. The next natural step is to have liquidity mining. In order to basically distribute as much tokens to our users as possible.
Okay, that's nice. And yeah, you mentioned some numbers. Can you give like an example? So you said you have a pool of 500K currently. Can you give some, numbers? How much did it earn in fees in last week or last month, last 2 months, something, just so people get a feeling.
Sorry, I was on mute. Sure. We've tracked our performance according to total returns. Relative to our peers. And up to date. And so far, our USDT pool is outperforming by around 5%. So in absolute terms. Compared to our largest peers. Our USDC pool has basically done pretty well. Has basically performed on par with a 4-range LP. So since its inception around 2 months ago, which actually is quite a remarkable achievement because 2 months ago, ETH prices was around 2,600-ish. 2,500. So when we first launched the boat, and then despite the dip, the boat is still able to keep up with a 4-range LP. And then this is just the first version, and we're building and we're learning from the data that we've collected to build even better strategies. So that's just some very rough data. So very roughly, the total returns, that is fees minus impermanent loss, is around 5% in percentage term, in absolute terms, so better than our biggest competitors.
Okay, yeah, that's what I wanted to ask. You said you are outperforming something, but you never said what is that something, because it's not easy to say what is the benchmark.
Yeah, so the benchmark that we measured ourselves kind of against is a 4-range LP. So in the sense that you provide liquidity with kind of with an infinite range on Uniswap version 3, so which is basically like a version 2 LP. So basically that's the benchmark. We have been comparing ourselves against. And then what we do is that we then compare our peers' performance against that benchmark too. So and then we compare ourselves against our peers. So if that kind of makes sense.
Yeah, for me it does make sense to compare yourself to like a no-brainer V2 strategy, like a default comparison. Do you guys maybe have like an APR? So if we deposit, let's say ETH and USDT to your pool based on previous 2 months, what's the expected APR given the ETH price remains the same, let's say?
That's quite difficult to say because it's if you're thinking about fees APR, then that's actually not a kind of or not always a reliable measure of performance because I mean theoretically I mean you can narrow your ranges and then to get whatever amount of fees you like. But when you narrow your ranges, you also have higher impermanent loss, which means you have higher chance of capital loss. So that's why we kind of netted the fees with the impermanent with the capital losses to get the total returns. But and then we compare that against what you would your capital gains or losses that you would have earned if you did a 4-range LP in V2, for example. And then since inception, around 2 months ago, so it's performed on par with a 4-range LP. Which like I mentioned earlier, it really is it is quite remarkable because these are the times where you would expect an LP vote to perform at its worst. So I mean, does that help?
Yeah, I think I understand what you guys are saying. Maybe just to get a feeling, how often does your strategy rebalances itself on the average?
At the moment, it's every 12 hours, but that's like another like active area of research. Firstly, like how often should it rebalance? And secondly, like what should be the trigger condition? So for example, there are other possibilities like maybe it could rebalance when the price moves by X%. So there are many possibilities, but at the moment, we've kept it simple and it just does every 12 hours.
Okay, yeah, and yeah, I understand that you really can't build a full-fledged product in 2 months, so that makes sense to take step by step. And maybe, how does your strategy behaves in the conditions where market is very volatile? So you had, some volatile market in the last 2 months. How did the strategy behave in those conditions?
And the strategy actually behaved so really well, so relative to our peers in handling the volatility. I mean, these are the times where you would expect a significant amount of impermanent losses, i.e. capital losses. And our strategy has actually mitigated this risk really well, comparatively. I mean, we may have so even though we've collected less fees because we use a larger range for our strategies, but our kind of rebalancing mechanism has mitigated capital loss very effectively. So that's why over the past 2 months, we were able to keep up with a 4-range LP. And then we were able to get higher performances compared to other similar protocols. So it's not through fees earned, but through better management of capital losses.
Okay, yeah, that's good news. That your protocol, and you said it was audited. Were there any issues found during the audit? And who did the audit? If you can share that information.
Sure. It was done by Certic, and there weren't any major issues. There were only like some like minor or like informational issues. Yeah, and they've been resolved. So yeah, like that gives us like more confidence in the security of the protocol. But like obviously, yeah, you can never be 100% like certain in anything. So yeah, for anyone who deposits into our products, then like I'd always advise like don't deposit more than you're willing to lose.
So also just like to add that, so Max has built a product and a protocol so from the ground up, from a securities first mindset. So, so basically, so security is always on the top priority. So, so for Max, when he writes the codes, and then he actually spends a lot more time in doing thinking about possible attacks, and then doing unit testing than actually writing the code itself. So, and the audit is just a sense check on top of the phenomenal amount of securities related work that has been put in to the contracts.
Yeah, that's great news. Maybe somebody else on the panel has questions, because I feel I asked already like 10 questions. Three, two, one.
I think my curiosity is, have you guys done any kind of analytics on the effect of impermanent loss on these rebalances? And can you talk a little bit maybe about the algorithm that you're using to kind of determine like these, you were describing limit orders being used to rebalance these positions. If you could talk a little bit maybe about the math of that, I would find that really fascinating.
Yeah, sure. So for every strategy that we launch, then we backtest it, and then we also do some other checks to make sure that like it can outperform a full range LP, which is the benchmark that we use. So for the rebalancing, then firstly it does like what we call a base order, which is kind of a wider order around like symmetric around the current price. And that's kind of like the main order that like captures fees over time. And then the second order that we do is the limit order, and that's like more narrow. And then we found like a ratio of like 1 to 3 in terms of width. So the limit order is like 3 times more narrow than the base order. We found that that tends to work well, and the limit order is placed like only on one side of the current price. And it's like a single-sided order, which is what allows it to to get closer to 50-50.
That's really interesting. That's like really fascinating, actually. The idea of having a one-sided order, like you're basically, there's 3 NFTs if you think about it from that perspective, right? There's an NFT you go into to rebalance on one side, or an NFT on the other side, and then you're very like wide range. And you were saying that you use like a 0 to infinity, like a min to max order as like a benchmark that you're kind of comparing them against.
Yeah, exactly. One small thing is that so for the limit orders, then there only needs to be one. So for example, if you have more of like token A, then you only need like one order on one side. If you have more of the other token, you would only need one order on the other side. So there will only be like 2 positions, the wide base position and then like the narrow limit position.
Yeah, basically to summarize, the strategy always try to sell excess inventory in order to go back to 50-50. And if you sell this inventory, then there's consolidation, which always happens in markets. So that's why passive rebalancing in the long term will work in increasing the likelihood of getting back to a 50-50 balance, and if you do it in such a way that you don't pay any swap fees. Actually, other traders pay you the swap fees. And then that can increase performance.
Is there any consideration given to like same block rebalancing? So something I've seen recently with the emergence of miner extracted value is that people, instead of going into these gas auctions, you can basically pay a bounty to be included into a block through a private mempool. And with that advent, we've seen a whole lot of different bots kind of emerge. And one of them that I've noticed in the recent days is basically adding liquidity and removing it within the same block and kind of harvesting fees. Is that something you guys have noticed or thought about at all?
Yeah, I think I saw like a tweet about that. And I'm not really like, I don't really know that much about MEV, but I think for us, we're just trying to like do like more long-term LPing. Like, so far we haven't really considered strategies where it rebalances like every block or like in the same block or like very frequently.
Yeah, so and also, so just from my research as well, so I think the particular instance of MEV extraction that you talked about was maybe a case of an uncle bandit attack, so which is actually quite rare because it kind of relies on the creation of an uncle block, and then someone noticing that a transaction has been placed on that uncle block and then try to front run it. But with that said, it is still be quite interesting to see how frequently attacks like that still will occur on Uniswap V3.
I think that was a great answer. Yeah, that's one of the considerations I've had for like the last several months is paying very close attention to these arbitrage bots and the things that they are doing. And I think that your product sounds really interesting from the perspective of kind of automatically rebalancing towards that 50-50. I think that for a lot of people, managing these ranges is, it's something that takes a little bit of experience. And so, easing people into that is great.
Maybe somebody has some questions, because shout out to Phoenix for collecting all the questions from the text chat. So anybody on the panel has additional questions for the Charm team? Okay. So yeah, in the text chat, we have like 5 or 6 questions. I noticed like 2 or 3 of them, so we won't repeat ourselves. Some are pretty easy, like how big is your team? How many people are working on the protocol? Impressive that you built a strategy so fast. Some people are still struggling with it. And the other question is, so you rebalance every 12 hours. Did you ever find your position to be, outside of the range? I phrased that poorly.
I think I get what you mean. I think until now, the price has never gone outside the base order range. One reason is that for the base order, we actually use a pretty wide order for that. And the reason is we actually found, like in backtesting, that using a wider range tends to work better. So I think that's another area where like we might be different from like other projects that we've seen. Like we've seen that they tend to use like more narrow ranges, but for us, like from what we've seen so far, then a wider order tends to work better. And I think that's one reason why the price has always managed to stay in the range. When we rebalance every 12 hours.
Can you give us a concrete example? So, for example, your USDT pool, currently the ETH price is 2,250. what are the upper and lower bounds of your current position?
Yeah, sure. Actually, I'm just checking on the front end now. Yeah, so for the base order, which is a wider one, the range is from 1,477 up to 3,053. So like roughly 1,500 to 3,000. For the narrower limit order, then it's from 1878 up to 2,117. Yeah, so the width of the base order is like 1,500. The width of the limit order is like 300 or so.
Sorry, I have a quick question. When you say back testing, what are you actually testing against? Are you checking historical volume at certain price points compared against like applying your strategy and checking the gain or APR equivalent? Or like I haven't had time, sorry, to look at your docs, so I can't tell for sure like when you say back testing what you meant by that.
Yeah, sure. So we do like a variety of things. The simplest thing is to do a simulation like based on like Uniswap v3 data so far, and then to see like how it would have done if you had ran it like since the pool opened, or like since v3 launched, and then yeah, we have some other techniques like because like v3 has only been out for like 2 months, so there isn't that much data. So we have some other like data augmentation techniques to get like more reliable results.
Okay, and in terms of the cost, then I was thinking previously it was mentioned that for rebalancing you guys put range orders instead of doing a swap to save on that 0.3%. But what about the gas needed to put in a range order against just doing a simple swap? I mean, I guess now that you are fully audited, you are going to increase the cap, the economy of scale. Like, what's the effect there for all these relative costs? Because obviously, the more TVL you have in there when you are still doing the same 12-hourly, for example, rebalancing, the percentage cost being used or borne by every single LP is going to be a lot less. What can we expect? For example, if your TVL doubles, like what do your simulations say will happen to your APR if the strategy performs, just like how it's done in the past few weeks?
I think from what we've seen, actually, gas fees don't have like such a big effect on the performance. So one reason is that the contract was written in like a pretty gas efficient way. Another is that, like you said, then kind of we're expecting once the cap is raised, we're expecting the TVL to grow a lot. And then, like you said, then the gas fee would be like a much smaller percentage, like relative to the whole TVL. So we think that, gas costs aren't really a big concern, like unless you're rebalancing like every hour or more frequently than that.
Okay, thank you.
Yeah, and the last question is, how open source is your project? Are all the parts of the project open sourced, or you have something that's not yet open sourced?
So the contracts are all open source. They're on GitHub, and they're also like verified on Etherscan. The front end and the research framework are not open source yet. Later on, like after we have more traction, then we want to make them open source so that like we can collaborate with more people then.
Okay, so yeah, if the contracts are open source, that's the most important.
Yeah, and I plugged a link to the GitHub for them in the June 30th chat room for anybody who wants to jump into GitHub. Take a look at those contracts. They're super cool.
Okay, and one last question before we move to the Popsicle guys is, you said, the rebalance needs to be triggered from the outside on the Alpha Vault. Who can do that? Can anybody do it, or only you guys can?
Yeah, so a keeper can be set, so only the keeper can call it. And that's kind of just like an extra element of security. If it's open to anyone, there's kind of the possibility of of someone manipulating the price on the underlying pool and then calling it. So that's like another attack surface. So that's the main reason why it's set so that only a keeper can trigger the rebalance.
Okay, so in theory, somebody gets access to the keeper who shouldn't. Users will still be able to withdraw their funds from the vault. Only danger is that it will keep rebalancing.
I think it's more like theoretical. Like we haven't thought of an attack that would work that way, but it's just like an extra precaution. Another thing is that in the rebalance method, and there's actually a check that the current price hasn't deviated from the TWAP by more than X%. So that's kind of a check that like no one else is manipulating the price when the rebalance takes place. Because like if the price was like crazily high or low when the rebalance happens, then the order would like be placed like really far away from where it should be. So yeah, there's that check that the price isn't too volatile like when the rebalance happens.
Okay, yeah, and let's just this comment I had. So in case somebody gets the access to the keeper, keeper doesn't control the funds inside the contract.
Correct. They don't. No. Yeah, it's like non-custodial. So no one else can withdraw the funds from the vault. The keeper the only permission that the keeper has is just they can call the rebalance method.
Okay, thank you. This was really interesting. You guys were the first ones we had on the call that are trying to tackle this, challenge in the V3. So we had maybe some of the questions that were more in general. And thank you for explaining everything.
Yeah, thanks a lot. Thanks for having us.
Yeah, feel free to plug any links in the text chat or June 30th community call so people can check out your project.
Yeah, will do. So thank you very much, guys.
Yeah, thank you for responding in such a short notice, for building on top of Uniswap, sharing your knowledge about liquidity providing and everything.
Great, thanks for having us.
Yeah, I thought it was a really interesting discussion. I was glad to run into your product actually because it was sort of illuminating to a problem I think a lot of people have right now. I've been chatting almost daily with people that are going out of range, or they don't understand the ranges very well, or they're trying to time the market with the ranges. And so I think products like this really help make it easy for people. And so that's the whole reason we have stuff like the Uniswap Grants Program, is so that we can get things like this funded. That's a great product.
Yeah, good luck guys in your future development, and if you have any major updates, just send me a message. We'll bring you for a future community call so you can explain us what new features you implemented and stuff like that. We'll be more than happy to have you back again.
Great, thank you very much, guys. So for having
Is there a recording of this call?
There is. We have maybe 2 or 3 guys recording it.
Is there a way to put it in the Uniswap Discord afterwards?
Yeah, I'll probably even create a YouTube channel just for the community calls. So we start pushing those out.
Fantastic. Please, if you could put the link in the Discord, that would be fantastic. Thanks.
Yeah, no problem. Okay, so our next topic on the agenda is these guys that are keep spamming ice in our chats. It's the Popsicle Finance. On the stage, we have Squirrel and Daniel. They are part of the Popsicle Finance. And yeah, guys, take it away. Make an introduction of your project, and then we'll start with the questions.
Yeah, hello. So, I'm not surprised. So, I was talking about a little bit of MEV and the attacks that are happening right now on Uniswap v3, because it's kind of a topic that was going to be touched before, but I actually work very closely with the Flashbots team and StepGo and the Alchemist community that is very close also with all the MEV situation, and we run a MEV cat node because we actually use that for the rebalancing, but that we're going to talk about later. I find it fascinating how every week we see new bots and everything. So one of the most interesting one that is something I've been working on is this what I call an OTC fill. That is what previously your colleague or your community member was talking about. That is about adding a wall of liquidity into the same block and removing it. But maybe it's interesting for everybody to know about how that works. So what is the goal of this is to basically feel similar to an OTC deal, so get a fixed price for filling the wall block, and getting that money that based on the fact that you are so tight on the range, you are on 1 tick or 2 ticks on the range, you basically translate all that money into the other side, and the other side on a centralized exchange, you can sell it. So you basically get an instant arbitrage, which is for very large numbers with a very straightforward price, and you use the MEV auctions to make sure that you are incorporated in the block, and if you don't win that auction, then if you're not in exactly the place in the block that you want to be, then you're not gonna move ahead, so you don't lose any money, which is very interesting for flash bots. That's what they do. They make sure that people that run these bots and arbitrage bots and complex strategy, even sandwich attacks or whatever, they make sure they get executed and they don't have front-running issues. So I think this was an important topic to talk about, because front-running is something that makes managing liquidity dangerous. As maybe some of you don't know, but even adding liquidity to V2 in certain pools can be front-run, or adding liquidity in general can be front-run and can change and can be disruptive for a position or for anybody. So you can basically attack adding liquidity or removing liquidity even, and especially on the pools, on the V3 pools, you can really do crazy stuff about it. So it was very important for us from the beginning when we started to work on products to figure out ways to mitigate this. And the first time that we started working on Popsicle,
Sorry about that.
Let's go, we back on. Let's do this. So I was actually going first to answer your question about the MEV and the type of attacks that are happening now, because I find it fascinating. And actually, I work very closely with the Flashbots team. So we look at this constantly, and with StepGo and Michael from Curve, we were looking into the recent attacks, and I actually built a bot for that. And I wanted to give a little bit of clarity on MEV and what's about. for the audience so people understand what's going on behind the scenes a little bit. So Popsicle Finance runs MEV auction flashbots GetNote, which is what is basically the client that is used to communicate directly with the miners. Pretty much like 89 to 90% of all the miners on Ethereum run the same client. So what this allows is to have a standard type of auction in which you can request the miner to be included in certain blocks, in specific blocks in a specific order. So basically you can't be front run, which is very interesting. And you can make sure that execution of what you want to do on chain is exactly what you want. What has been happening recently is a type of almost like a sandwich attack, but I call it an OTC fill because I come from the centralized exchange world, and there I would assume that basically what is happening is the following. So I see the mempool, and in the mempool you could consider it almost like having a good flow in a traditional arbitrage world. So almost like Citadel and Robinhood, right? So Robinhood tells Citadel like, oh, there is a lot of customer now coming, so you better be giving quotes to these bids on the exchange so you can make money, right? The same happens transparently on the blockchain. So you see on the mempool that is coming this big amount of money, right, towards the UniVip3, for example, USDC Ethereum pool. And there is a large seller or a lot of sell orders for Ethereum. What the bot does and what we do now is basically adding liquidity before this happens and remove the liquidity right after. And the liquidity add that is being done is super tight, 1 or 2 ticks, depending on the depth of the pool and the amount of course, of money that you have to put inside. And you try to calculate exactly how much would be filled based on how much liquidity there is exactly in that tick range that you are trying to consolidate. And what happens is that, let's say that we have these sellers of Ethereum, we have 1,000 ETH that are coming in as selling orders. You have a wall for buying all these 1,000 ETH. You get completely filled into the tick. So you exactly know what is the price that you are getting filled out. And at the same time, on the centralized exchanges, you are selling it back, right? So what happened there is you remove the liquidity, so it can't happen that during the same block you are ordered by the MEV in the exact same point in which you want to be. You remove the liquidity in that same block. It can happen that you are buying again or something strange happens. That's why it's so powerful, the flash bots, right? And you just get out with your USDC, and in the meantime, maybe you're covering that position on USDT that are being bought on the other side, right? So this is a little bit what is happening with this type of attacks. I think it's very important to understand that centralized exchanges and decentralized exchanges are becoming always more and more similar. What fascinates me on UniV3, and one of the reasons why we have been putting so much energy and effort on building on top of it, not exclusively, of course, because we build a lot of other stuff, but so much, one of the first products that we wanted to release, this Sorbetto Fragola on V3, is because it reminds me a lot of what a decentralized exchange should look like, right? And I believe that there is so much stuff that you can do on V3 that we haven't even explored it yet. And I work almost daily on the market, looking into opportunities specifically for the reason that it's just fun, you know. And we do. I'm at the stage of my career in which I am fortunate enough that I can do what I love. And because of that, I found here in Popsicle Finance and in our project with this beautiful community that is here, and shout out to all our followers and all the people that believe in the project and are here listening to this ape around up here. I found my dimension, and with V3, we are having a lot of fun, to be honest. Now, what's happening with V3? So I think there are two cool things about it that makes it very unique. First, the NFT, it's cool, so people love it. I think that's the reason why it's getting traction. No, I'm joking. Like the cool thing is that we can do strategies. We can be very efficient on the side of capital, and we can deploy interesting strategies to be able to capitalize on the fees that the exchange generates. If you look at what is happening around DEXs, you can see that there is pretty much no competition. There is V3 and the new 3 crypto curve, which are the best execution around. There is nobody else that can execute everything, all the bet flow, so the arbitrage flow and everything else gets executed on all the other pools. So for example, I can eat USDT farming sushi swap pool right now is just getting bet flow. So everybody, it's just arbitrage. And most recently, there have been a lot of interest across the 0.05 or 5 basis point ETH USDT, ETH USDC pool versus the one with the 30 basis point fees. So you can see even right inside of Uniswap V3 how things change in the flow, in the good flow and the bad flow. So all the good flow is going toward, all the normal execution is going towards the 5 basis point pool and is earning a lot of fees. And we have, of course, one strategy that touches that, and all the arbitrage then it's get done in between the 5 basis point and the 30 basis point. So people capitalize on moving this efficiency or this cost in between those two pools. And this is very interesting because this shows exactly what I think the point of V3 was, that people can decide how to build up their liquidity or their strategies, and the market then is gonna take advantage or not of you, pretty much, right? And what with Popsicle Finance, as soon as V3 was out, we were there and looking into it. So I will a little bit give some feedback on what Popsicle is. And Popsicle, we have two ways of calling it. So when I spoke with Andre Kronia for the first time about Popsicle, he said something that I will always use now, and he said, "Oh, it's like Yearn, but for liquidity providing." So Popsicle is exactly that, but I like it more in another way. I think is the decentralized citadel, or the decentralized market maker for the decentralized finance, right? So I figured that what we needed was a project that, just like the Yearn Vault, distributes all the lending markets. So it distributes, for example, USDT across all the lending markets, Aave, Cream, and whatever, DYDX, and whatever. We needed projects that would be able to distribute liquidity across all these different exchanges and make sure that not only the supporter of the single Sushi Swap or Uniswap or just recently Kyber, that is something that if you guys want to talk about the differences of V3 and Kyber, we can even talk about this later in a later stage. But we don't want that just the supporter of the single project becomes the LP. We want LP to become an asset class. We want anyone in one click to be able to take advantage of the opportunity of becoming a market maker in the most inefficient market in the world. And inefficiency is good. Like, inefficiency is what makes those juicy fees all the time that you see when you open Popsicle Finance and you're like, oh shit, how is that possible that it's making like 200% APR? Well, that's inefficiency. And we saw it in the 90s, we saw it in the early 2000s, and inefficiencies is across everywhere. And Jörn was doing this for lending markets, and we decided that it was about time to do it for LPing on decentralized exchanges. Now, we then needed to look into how does that exactly work, and how does that work is that you need to route liquidity across all type of exchanges, right? So you have the V2 class exchanges, you have the farming exchanges, you have the V3 style exchanges. Now you have this new style like Kyber pools, and you need to be able to be efficient across all of them. So you need to be able to basically mix in between the passive type of LPing, like on SushiSwap, that is a more farming type of LPing that is subsidized by the token, and the passive V2 Uniswap type of LPing that is not subsidized but is has a lot of volume, so you get a lot of fees out of it, and is actually the one that pays the most in terms of fees. And then you have the active, proactive V3 LPing style that on the other side deploys the least amount of capital for trying to gain the maximum amount of return to the investment. Then you have all these new realities that are popping up, and I'm very happy to announce during this call that we will be also available on Arbitrum. So as soon as the gates will open to the layer 2, Popsicle Finance V3 Sorbetto Fragola, that is our rebalancer strategies, will be available on Arbitrum for Uniswap. And you have all these realities that become like cross-chain, and you want to be able to give the opportunity to people across all sorts of blockchains that are solid, and this was the vision of what we are trying to do and what we are doing. Now, speaking about specifically the Uniswap V3 Sorbetto Fragola, which means in Italian strawberry sorbet, but of course, like Ferraris, everything sounds cooler in Italian, so it's Sorbetto Fragola. What we do is making it very, very, very simple for anyone to get to have a position as a liquidity provider on Uniswap V3. What was the aim for this Sorbetto Fragola? So we had multiple ideas, but more importantly, we had 3 important components that we had to deliver. So the component number 1 was trying to make sure that we are always in a range that is profitable and doesn't lose money and makes money, right? And it's of course probably the most important. The second one was to be able to give out a token, or like a LP token or Popsicle LP that could be used for composability on DeFi. And then the third was the auto compounding feature, because I posted tweeted it today, but if you double 1 cent every day for 30 days, you arrive to $5 million, right? So compounding is very important for making sure that at the end of the year, the passive LPer that becomes active through Popsicle Finance gets the most out of his return. This was the 3 things that we're going to talk about today about our product, and is what we were focused about exclusively on Uniswap. So let's talk about ranges. So for a long time, and everywhere I hear a lot of people talking about complex strategies. I mean, you can't really backtest anything on Uniswap V3 very efficiently. You can try on LPing like 50-50, on the V2, you can try to compare what is the current performance versus the past. You can do modeling of all sort of algos, but you can't predict the future. So everybody that is in this course, you have to know if you're LPing ETH USDT and ETH is gonna dump, you're gonna lose a fuck lot of money, because that's how it is. Like you can't really look into impermanent loss here without looking into the market direction. Everybody's happy, see things growing as long as the direction of the market is up. But of course, in a downtrend market, LPing is as risky as holding those assets on your own. Secondly, very important, is that we make money in the chop. So the more the market stays like this, the more money we make. Of course, when you're LPing here, you're not farming, so you're making money with fees. So if the volume it's very relative on market conditions. So yesterday there was less volume than today, for example. So the fees are very dependent on that, and you make money if people use Uniswap. So be aware of that. The money that is projected to be made is different every day. So how do you know? Well, we try to make sure that you make the most out of this asset class, right? So how do we do that? Complex strategy for what we have seen so far don't work. Because the more you rebalance, every time you rebalance, you're basically taking the impermanent loss. You're saying, okay, it's fine, but I'm gonna make it back. It's like I'm leveraging, I got liquidated, yeah, but I'm gonna make it. We're gonna make it. No, well, we need to be a little bit, and I agree in the guys that were up on stage before that trying to have a wider range is better. It's better, but you need to try to optimize it at the most, because even a 5 or a 7% difference on the optimization can make or break the bank. So we tried many strategies. We tried to be super tight, super crazy. We tried to be super wide. We tried to be whatever. What we figured out, and in the last rebalance that we did, we widened a little bit with this market condition that are very choppy. When you see that the range of the weekly high and the weekly low and the monthly high and the monthly low is very similar. We take something, the volatility, 14 days volatility with the stochastic calculation, and we take it as the range. So we take the center and we go wide, so 27 or 28% was the last 14 days volatility, and from there, so we have one side 13 and a half or whatever, 15, and the other side 15, and we try to stay in those bands. We rebalance exclusively if it goes all the way down to 80-85%, and it rebalances very slowly. I wanted to, in this, to talk about again MEV. It's very important that when we manage a lot of TVL, I think that right now in just 4 days that we launched, or 5 days that we launched, we have the highest TVL on anybody doing this, and we have about 17 or 18 million today. And we need to be very, very freaking careful, because if you go out in the wild, I am the typical guy that would try to get a project like mine wrecked, because we need to execute a large amount of swaps when it goes out of range, and we need to try to go back into the range that we wanted. So what's happening here is that we use the flash bots in order to execute our swaps without being seen, because what happens here is that we don't go in the mempool, right? So we go directly into the auction, so nobody, no other botter know what we are doing, and we can be at any place of the block that we want. We just pay a little bit more, but that's really small fees compared to the disaster that can happen of somebody front running our swaps. And it doesn't do it all together, and this touches the second point that was actually the third point, that was compounding. So to be able to make a compounding efficient and also the swap efficient, what we choose as a design choice was to do the auto compounding together when the rebalance happen, because it happens that after maybe we rearrange after, I don't know, 3 or 4 days. Then after 3 or 4 days, we have collected quite a decent amount of fees, right? And these fees are there to be used. So sometimes we don't need to rearrange to swap that much of our existing capital inside. We can use a lot of the capital that we have created or generated to place it in the right place on the LP. So then we don't really swap a lot, and we mitigate the costs of swapping that exist. Also, we can search optimal routing during the swap. We don't need to stick to Uniswap specifically for this. If a Uniswap is the best execution, happy to do it, but we don't have to do it. So this is very important. Then LPing, PLPs, important. Composability, one of the biggest critics that Uniswap had, B3 specifically, actually only B3, was that it was because of the NFTs was not composable. Actually, this is not really true. We don't generate an NFT with our contract. We don't need to. The NFT is just an additional contract or additional layer into the whole system, but we can interact directly with the contract. So what we do is tokenize our shares, and these shares become just like the old LP tokens of Uniswap, so the Uniswap LP tokens, and can be used, for example, for borrowing and lending and other cool stuff like liquidity mining. And with this, we have partnered with Alchemist, with the guys that make the Crucible. So it's a very cool little thing that they're doing, and it's a type of smart wallet and some cool shit. And we do the liquidity mining through them, but normal standard master chef contract or whatever would work, or mini chef that is now in vogue because it uses timestamps, so it would work the same. We are working on making an institutional grade API that allows also to know at an exact moment up to the block what is our situation inside of the LP. So we know how many percentage of Ethereum and how many percentage of USDC, for example, we have. This would allow institutions to do hedging on centralized exchanges, which I think is very interesting. So imagine if you could hedge your position on the side of Ethereum, have no impermanent loss, and still farm those juicy fees. That is also important. And I run myself an hedge fund, and I do these complex strategies myself. So I want to democratize this type of thinking and make it super easy for both smaller institutional guys that don't have desks that all day look into these opportunities to be able to take them and increase the efficiency across the board. Then I've been talking, I don't know if you guys know, but we also have a project called with the token Spell, that is Abracadabra Money. So we are going to be also the first to take a Uniswap V3 LP tokens as collateral. So things are bright, guys. It's very cool what is happening with V3. We are always watching. We are doing our best to make it super easy. We need to a little bit clear the interface because I don't really like it that much. And I don't know if George is listening. I'm sorry, bro, but you know that I don't like it. It needs to be better. But we are the projects that really takes away the complexity and wants to make it super easy for everybody to just join the revolution of Uniswap, right? it's very cool what you guys have. So I'm very happy to be contributing on making it even better. A little bit of context, I would like maybe to look at. We don't offer yet any stablecoin pairs, but that's because pretty much it doesn't need so much of rearranging. But I don't know, I saw that Spada from Badger was here, that was coming to listen. We will offer very likely first their IB BTC, so interest-bearing BTC to WBTC LP on V3 as the first stable pair. Testing some new strategies that we are looking into that are very, very tight. 1, 2, 3, 4 ticks kind of stuff, in which we focused on not rearranging, but exclusively auto-compounding the fees, because that really makes a huge difference. Also on the USDC, USDT pool. If you can auto-compound, it brings the, at the end, the APR, auto-compounded APY to a very interesting part. So that's why I'm also working with Jörn to enable this as a Jörn strategy for single-sided Jörn Volt USDC and Jörn Volt USDT. So they can single-sided provide liquidity to this very tight range USDC, USDT pool and farm there.
Okay, maybe we can ask some questions.
Go ahead, please, guys.
So I think my first question is, you guys have a token, right? It's called ICE.
Yeah, ICE baby.
Okay, so it's a governance token? Does
It's
it
a
use
governance
quadratic
token.
coding?
Yeah, it uses quadratic voting. It's a governance tokens, and next week I think we're gonna do the staking that earns the fees out of the protocol.
That is super interesting.
So it's not just they use this governance tokens. It's a little bit more than that.
And so you're working with Jörn. You were mentioning, kind of using miner extracted value. Is there a particular mempool that you were looking at using for your vaults?
No, like we just use the MEB Flashbots client, get client. So that's where we route all our transaction with the bots that needs to do the keeper work, right? I forgot before you mentioned about rebalancing and who can rebalance, etc., etc. So our current setup is similar to the guys that were talking before, Charm Finance. The difference is that we are on the beta program for Chainlink keeper products. So we want to abstract it completely to Chainlink. So Chainlink with the oracles will tell us exactly when the rearranging needs to appear, because as you might know, guys, like contracts don't update themselves. They're made to stay there forever without doing anything. So the new keeper products from them is pretty exceptional doing that.
That is super interesting. In terms of your governance token, does it have the ability to be delegated at all? I haven't really looked at it closely.
No, it doesn't. But we did a new governance portal that we use, and we developed ourselves because we have a multi-chain deployment. So ICE is a multi-chain, has been the first multi-chain airdrop that has ever happened, and there is a lot of arbitrage going on. And we wanted all our LPers and all our ICE token holders to be able to vote in a single interface. So it's a little bit complex. It's something that I want to tackle when we will finish delivering the first version of all our products, is to try to figure out how we do decentralized governance or a DAO cross-chain, right? Which is, I think, super cool. And the future.
That is super cool. Agreed. I think that does me for questions. Does anybody else have any?
Is it true that with EIP 1559...
We have some questions in the text chats.
Let's check those out.
Are you guys able to hear me?
Somebody asked if Arbitrum makes miner extracted value obsolete because it processes transactions based on timestamp.
Yeah, I mean, Arbitrum is a complete different situation going on. So I think the situation of Arbitrum is gonna be interesting because we will have very very fast executions. So I mean, we need to see if we can check this how actually arbitrage or sandwich are gonna work there, because I see on Phantom, for example, they don't really exist because it's so fast, right? So you need so much compute power to be able to execute those transactions so fast. So I wonder what is going to happen actually on Arbitrum. I haven't really thought about this, to be honest, but it's a very good question. I don't think it's very relevant on Arbitrum, to be honest. Mine, MEV.
Yeah, and the other question is there a risk when you choose 5 basis point pool over the 30 basis point pool?
So you can see that everything depends on volume. So when you have TVL ratio versus the volume ratio, is what actually earns the fees. Of course, the risk exists, but I think that at the end of the day, what you're looking for is to make the most fees out of anything. And if the volume is much higher in comparison of the TVL in your range, then you're making more money on the 0.05 or the 5 basis point pool. But yes, the risk, potentially the impermanent loss is a little bit higher, theoretically, because the fees are meant to hedge the impermanent loss, theoretically, right? So you have two consequences. So I think we have to step back a second and look at what the AMM is and why is designed as it is. So the idea of the automated market maker is that no matter what, the fees that you are earning are gonna hedge the cost that you have or being in a price of the assets underlying in the pool difference from another market. So for example, you now have a BTC at 35,000, and on another market that BTC is 35,500. You need to you will be hit by the so-called bet flow. So the bet flow is the arbitrage. So you are betting that the fees that you're collecting every time a trade is executed on your pool, that those fees will cover that price difference. So the 5 basis point pool is a bet that there will be so much good flows because the fee is low, that your price on that pool will be always the best price. So you will be always the tightest price around, and actually the bet flow is bounced out to another type of pool, like at the 30 basis point pool. Did I explain it well or a little bit complex?
Well, the whole topic is a little complex, let's be honest, but I think your explanation was clear enough to me.
Yeah, it's like you have to think that when you are a market maker, you want that your asset is priced correctly, right? So your bet into the 5 basis point pool is that your price is priced correctly always, and is the other pools that have 30 basis point or more that are mispriced. So they are getting the arbitrage rather than you. You get the execution, the good execution.
And I think too, in the 5 basis point pool, there is a tighter tick spacing, and I think that has an influence on the amount of volume as well.
Agreed, and even the spread there, the slippage there is lower because of that. Like I can see, for example, right now we have many pools open, but we have much more TBL on the 30 basis point one than the 5 basis point, but that's also happening on Uniswap. So in general, there is much less TBL on the 5 basis point, which is good, which is great, because it allows a little bit to release the fees, and it kind of splits the TBL in between those two pools and creates arbitrage opportunities that create volume, and that's fantastic, right?
Yeah, well, Hituruk with Penguin Party discovered that arbitrage opportunities bring volume like months ago when he deployed, I think, Fish token with all the other tokens from top 20. And yeah, bots were going crazy and it was nice.
You always call with your bots any sort of prices or any sort of pairs, weird pairs or whatever. As long as your arbitrage is atomic, you don't really care what the asset is paired of, as long as the quote makes sense for your ARB, right?
Yeah, well, and that was the concept behind what we did. Was we created a bunch of liquidity pools for a single token, and then arbitrage flows through it. So the liquidity attracts volume. I think is the answer to what the people were asking: is the 0.05% always going to outperform the other ones? Liquidity kind of pulls in volume, so it's a matter of there being enough liquidity in a wide enough range, and then. I think in most cases, if there's enough liquidity, the 0.05% generally will outperform the other ones, so long as that's not what everyone is into. So there's an element of it that people are kind of competing.
Yeah, there is also, but we also have to be aware that there is a limit on the volume that can happen, right? So it's not that it's all completely proportional. There is a point in which the volume is what it is, right? And even if you add more and more liquidity, it's not going to make it, you know? So there is this kind of balance in between that is happening right now that is just perfect.
Yeah, completely agreed. It's a competition. People have to, and that's what these products are helping do is abstract it away so that the common guy doesn't have to worry about setting crazy limit orders to market make these assets. It's very automatic. I think your product seems really cool.
It's simple. Like I didn't want to make something too. Well, it's simple on the surface, of course. Maybe for me, simplicity is something abstract. But for me, it's pretty straightforward. Everything has been the first audited contract out there for both liquidity mining, auto compounding, and rearranging. We are getting the second audit now, and I'm gonna do also formal verification for it, so I can get institutional there.
That's super cool. And who's doing your audit?
So we have PackShield now, Certic, and then I want to use Certora for using Certora for the formal verification.
That's definitely pretty above and beyond in getting it done. Kudos to you. I think it looks like a really decent project. It was cool to hear about it.
Yeah, we're not really hanging that much into the Silicon Valley or more vibes, you know. That's why maybe you haven't heard of us, but we have a very big community and we quite present into the alternative DeFi space.
And maybe for the last question, something that everybody can understand. Can you give us some numbers? Like, let's say you deposited 1 ETH. I heard you don't support stablecoins right now. What's the return you can expect?
Just quick, we support stablecoin, just not stablecoin pools. So we have ETH USDT, ETH USDC. We just don't have USDT USDC pools
yet.
Okay, so yeah, maybe let's say month or I don't know when you launched.
So it has been consistently above 150% APR on the stablecoin pairs and is ranging around 80% on the crypto to crypto.
That's some alpha there, 150%. You're not going to see that in your bank.
Yeah, you should pull our pools on Nansen so you see the smart money that is in. A lot of people is joining those pools. Very, very cool wallets.
And does the APR significantly drop if, let's say, your total value locked doubles?
No, not at all. The reality is that it drops if there is less volume on the pools. That's about it. I think it can scale to about 5 to 8x what we have right now on a 30% drop on the APR.
Which is why it's very interesting to see over the last 4 or 5 days. Obviously, volume has not been great, right?
Yeah.
And so, because of that, it's actually been a great test for us in comparison, kind of when numbers are super crazy, volumes are super crazy, and there's just one direction.
Okay, yeah. So everybody can understand 150% APR.
Yeah, I think I'm gonna also change this a little bit and also add like a migration button, because it's something that I don't think Uniswap has achieved very well, to migrate liquidity from V2 to V3. I think that showing what it can be achieved is a big driver on moving that liquidity across, right? So I wanted to do like a comparison, kind of like percentage, like a ROI, return on investment situation, that we're gonna launch maybe in a couple of weeks, in which you can migrate your liquidity to a better place.
So are you saying you will make something that will migrate from V2 to V3?
Yeah.
Or from V2 to some other...
No, from V2 to V3.
Yeah, that's really interesting, because Uniswap Grant Program has an open bounty for liquidity migrator from V2 to V3.
Yeah.
And if you have like an interesting idea...
Yeah, it's very simple, guys. I mean, show them how much more money they can make, they'll move it. That's kind of like the, right?
Yeah, if you'll keep it clean, so from V2 to V3, yeah, just reach out to
Uni V2.
Yeah, I think it's more of that. I think it's more of the scare of people not knowing how to do it, right? In terms of like what range do you set and everything.
Does the bounty, would the bounty apply to migrating from V2 to Sorbetto Fragola?
Essentially still giving the liquidity to V3, right?
Yeah.
Yeah, I would have to discuss that with other Uniswap Grant Program
I mean,
members.
we're gonna do it anyway, even if we don't get the grant. I mean, we haven't requested the grant so far, so it's not gonna be. But it's gonna be cool if you support us. I'm happy, very happy.
Yeah, sure. When you decide how you want to do it, you can always jump in a call and discuss it.
Yeah, it's gonna be very simple. Like, you're gonna see how much your LP current is making. So you have it in your wallet, and you one click and go to Sorbetto Frag. That's it. That's how it's gonna work. Yeah.
Okay, maybe we have like a last question. I see Vibes tagged me. Somebody's asking about Limone, and we don't know about
getting audited. Limone, it does basically so we're talking about a future in which we have so much liquidity at a certain point on V3, right? That the APYs are almost the same, and there is no more sustainable movement of liquidity in between V2 to V3, right? So what Limone does is basically redistributes in between Uniswap V2 and Uniswap V3 the liquidity to take both opportunities at the same time, and also on other exchanges that are V2 type. So the idea is that in one click you can become a liquidity provider, just like your Volt USDT, for example. What does your Volt USDT does? It routes the liquidity across all lending markets. So the same will do Limone. So it goes to Fragola, it goes to V2, it goes to Sushi, it goes to Balancer, or whatever. Okay, it's getting audited. That's the status now.
So that's like next milestone that you guys are going towards?
Yeah, yes, sir. Becoming the largest liquidity provider in DeFi.
Nice. Thank you for this call, for presenting your project,
Thank
and
you,
for
guys.
building on Uniswap.
Very, very happy to build on Uniswap. I'm looking forward to be on Arbitrum together. And on Optimism.
Yeah, feel free to stick around for the rest of the call. We'll have, I hope, Don't is still here. He'll present an update on the Uni stablecoin. And yeah, I'll just be sharing the code for the POAP now in the text chat. So there are only 100 codes. If you want a community call for POAP, make sure to be quick. Daniel, for any updates in the future, maybe when you launch Limone, you can come back and say it, give us an update how that's going. How are you utilizing the Uniswap pools then? I'm sure it will be really interesting. Next on the agenda is the update from Ichi on the Uni stablecoin. I think it's called oneUNI or something like that. My mind stopped working. But we'll have all the information. And I hope you're still here.
Yep, can you hear me? Test.
Maybe he's AFK.
No,
I can hear him.
You guys can hear me okay?
Yeah, but it seems like Boar can't.
And he's gone. Cool, well, maybe I'll just get started. Hey, everyone. I'm from the Ichi community. So a little bit about Ichi. This is our second time on the Uniswap community call. We just wanted to share an update as this past week.
Question: Can we ask the last question to Daniel?
Yeah, sure. Go ahead.
If he's still around, but I think he is.
I'm here. Uni stablecoin. I want to hear.
Yo, Daniel.
Yo, how are you doing?
Hey guys, I'm fine, thanks. No, Daniel. First of all, let me say I am drunk as fuck. I'm not you.
Right.
I'm drunk there, but I'm drunk as fuck. But that's
Let's go.
Let me say, I am coming from the traditional finance and traditional asset management. I am the head of tax from one of the Germany's most popular asset management companies, and I'm following Popsicle from let's say since day one. Sorry for my bad English. I'm not a native speaker, so let me apologize for this. But first of all, please, guys, I have a proposal for being a multi-signer for Popsicle. Please support me. That's the first. But yeah, let me talk about Popsicle. But by the way, let me ask my question. The thing is, what I'm following on V3 on Uniswap is that I see that many new projects are having issues to be on V3 on Uniswap. So I have a VC, a relative big VC, which is not public, where I'm supporting relative small projects on start. What I see is they want to go on V3, but they have issues with the LP and the rates. Is Popsicle a solution to all those projects starting at Uniswap and listing on Uniswap with their rates? Yeah, the question is, why they need to do this manual, yeah? Why they can't use Popsicle to listings with their liquidity on Uniswap v3 with Popsicle, yeah? Because it will be automatized, yeah, you know?
Yeah.
You mean an initial liquidity launch pad?
I can tell you a little bit of experience about this. So the cool thing is that actually you can do the same that a lot of people is doing on Balancer, but on Uniswap v3. That is any sort. You can create like an LP, for example, that has a very specific bonding curve. And on that LP, because the liquidity provider is just you at the beginning, you can basically do what you want, and people can buy and sell it. And we did. I tested this out when we launched Abracadabra with the spell token, and some people became millionaires, which is funny. And I got a lot of hate for this because I just posted the LP. The NFT with the liquidity on V3, and I effectively did the first IDO on V3 that has a bonding curve. So there is the opportunity to do a lot of cool stuff on this side of things. But I think that the coolest thing that can be done is orders, like scaling orders. Like the next step is to create a unified interface for trading on Uniswap that allows also for scaling orders and limit orders also, because at the end, effectively, when you create an NFT that is one tick in a very specific range, you're actually doing a limit order. And when you're doing an NFT that is one side of liquidity and has a very specific rate, you're doing scaling orders if it arrives to the end of that range, right? So we want to automate this kind of things, and we are working on it. If you are aware, I made a proposal also on the Sushi Swap forum about margin trading and how that works, and the routing of that will pass, of course, through all the exchanges, and with the interface apes.win, we're gonna bring this to life. And I guess it's a good idea to also have some sort of launchpad there, a part of the margin trading and scaling orders and the limit orders on B3.
Thanks, Daniel.
Welcome.
Daniel, can I ask one more question?
Yeah, please go ahead.
You mentioned hedging, that you were doing hedging against impermanent loss. Can you talk a little bit about that? Because that sounds very, very interesting.
Yeah, but this is not decentralized, so I just need to say.
Have you looked at DiveX for doing that?
No, not really. If you can link it to me, please, on DM, I will definitely want to look into it. So one of the things that happened back in the day when we started Popsicle was that I had a long discussion with Andre about hedging impermanent loss in general, right? And what we agree on is that hedging on impermanent loss is basically on a standard V2. Now we talk about standard V2 type of pool 50-50 is about hedging against volatility. No? So if you are long volatility and you are on a pool, then you basically hedge your impermanent loss, right? But to be able to do that, Andrew was working on options, volatility options, and I've been looking into understanding who is going to buy that, because the market for hedging impermanent loss is big, but the market for selling this hedge might not be as big as the demand, right? So you need to be able to arb these options on a centralized exchange, but currently the volatility options are not that liquid. There is not so much market, so it was very difficult to kickstart this type of venture. So what I started doing with the hedge fund is dynamically hedge my exposure to one side of the LP on centralized exchanges with the execution based on the blocks.
So I always know what is my weight in the pool, and I rebalance the edging on the other side. So let's make an assumption. So what is interesting, and Popsicle is one product that I built for myself. So this I want to make it very clear. Like I started Popsicle because I wanted it, right? So I wanted to use it. So the idea here is that let's say that we are an LP provider on liquidity on centralized exchanges is higher, and you don't want to have to deal with the USDC swapping or potential differences in prices or bips that you can have. So then we have Ethereum USDT, and we are providing that liquidity to Sorbetto Fragua. What we want to know is exactly what's the weight in between at every block, how much ETH I have in there and how much USDT I have in there, right? So if I know that, then I can execute an edge in the market with either futures or however margin trading for the exact same amount. What that provides me is that at that point I'm flat. No matter how the direction of the market goes, I can just collect fees, right? So the difference is that I'm gonna pay for that edge. But it's also true that in general, shorts pay. So this becomes very interesting. So we can even connect this with what is happening on SushiSwap, right? This type of strategies are being implemented by Alameda and other hedge funds. So what happens is that, for example, you have sushi single side staking, XSushi. You basically edge yourself against the sushi. You stake, you have XSushi, you sell sushi on futures market, on FTX or on Binance. And the difference in between that and the yield that you're getting from the XSushi, so what you pay for the short and what you get from the yield is what you're earning being flat US dollar. Now, this is interesting because you can see that in the markets in Binance, you pay for shorting sushi, which is out of normal. It's not really a classic thing to see. Usually you get paid for shorts because people is rather bullish in general. But this shows that this strategy is implemented by a lot of people. The same thing they do with V2 farming on SushiSwap. So they have like sushi and ETH or other farming pairs, and they dynamically short their positions like ETH sushi. They know that it's pretty much always 50-50, so they check that how much is the pool weight that they have, and they maintain their position short on one side, and they are long spot basically on the pool, and they're collecting all the fees and all the sushi and whatever, and they're selling it on the market. That is happening also on Uniswap V2 all the time. And V3 makes it much more interesting, in my opinion, because you can really be very granular in how you do this kind of strategies, right?
So it's interesting. I was thinking that there's a bigger market for like guys that are very long ETH that want to do Uniswap V3 LP, which the APYs and APRs are pretty high at the moment in many of the pairs, but they want to protect any maybe sudden downturns in the market. So I think it would be interesting to make a product. So for example, let's say you have, I don't know, 150, 200 ETH, and you...
We should really move to the next topics.
We can have a call together.
Cool.
Yeah. No problem. Yeah, because we're already almost 2 hours into the community call.
Great, thanks, guys.
We are still on the first point of the agenda. It's really interesting. Those are really interesting topics, and we can, just discuss those topics. Invite Daniel next community call to give his insight into this. But I'd suggest we move again to the Ichi Uni stablecoin, and I hope we can all hear Dome.
Yeah, test. How about now?
I can hear you loud and clear.
Awesome.
Please take the stage.
Great. Well, really enjoyed both of those topics. We've been a big fan of the Popsicle and the Charm teams for a while. So this is, I think, my second time on the community call. Last time I talked a little bit about Ichi, which is a protocol which seeks to help launch a stablecoin for every crypto community. What that means is that we believe that each community, whether it's an Ethereum community, a bag of ICE holders, should be able to mint and govern their own stablecoin collateralized with their favorite crypto of choice. So for instance, we have just recently this week launched version 2 of our platform, which was audited by QuantStamp and Solidified. That first supported a stablecoin for the Filecoin community called OneFile, which is collateralized with Filecoin and USDC. A bit about the protocol is it deploys a decentralized monetary authority. We call it a DMA, which is those audited smart contracts that enable the community to guarantee minting and redemption of their stablecoin at $1 in value. It enables the governance of community treasury for that stablecoin. That means that you can then do things like establish strategies. The one thing we've actually been looking at using both Charm and potentially the Popsicle Finance opportunity is to have a community treasury that could take an LP position in one of those protocols to generate yield. All really in the interest of creating this pool of community treasury, which can be used to incentivize adoption of a given stablecoin. So for instance, the Filecoin community can choose to spend their stimulus to incentivize payments with OneFile, their own stablecoin. So all of this is really our goal, to create stablecoins which keep value in crypto communities versus requiring you to sell it all for something like USDC or USDT. It's very different than algorithmic stablecoins like DAI or Titan, which really are seeking to be one stablecoin to rule them all with multiple collateral types. It's really about building a stable, accessible currency for a given crypto community. So there's a few things we want to do with the Uniswap community and building on Uniswap v3. So first, we want to launch a oneUNI stablecoin, which is a stablecoin that is collateralized part with USDC and part with the Uni governance token. And I'll drop the link to our app in the text chat here and the agenda chat, so you can check out the experience for Filecoin. What this means now is any Uni holder can mint oneUNI and use that stablecoin across DeFi. We today have liquidity rewards for those who mint their stablecoin and deposit to the farming contract. It's something like 180% APY for Filecoin, so meant to incentivize that initial liquidity. But long term, what we want to do is use oneUNI as essentially a pair in a bunch of different liquidity pools on Uniswap v3, so that we can have any other stablecoin that we create or other scarce crypto trading against Uni v3 for people to get the advantages that it provides. One thing I also mentioned earlier, again, is the strategies capability for given stablecoin. So what we're hopeful is that many of those stablecoins will also use that strategies option to create concentrated, say, put side liquidity on their scarce crypto with their stablecoin or with oneUNI. So there's a bunch of different ways that we think will use the service and hopefully add value in giving each community its own governed stablecoin. I guess lastly, because I want to be respectful of everyone's time, we're hoping to launch in the next couple of weeks. We have our oneUNI stablecoin launching next week. We've also recently received liquidity incentives from the Bancor community for launching a oneBNT. And we're hoping that we can find, similar support in the Uniswap community for initial liquidity on the oneUNI stablecoin, and really make sure that it's as impactful and useful for the Uniswap community as possible. So I'll stop there. All of our contracts are open source, again, audited by QuantStamp and Solidified, so you can check those out in our GitHub repo, all from the link I sent in the text chat and the agenda chat. But happy to answer any other questions, or if you want to DM me, whether you want to be an early user of oneUNI, or maybe you've got your own crypto project that you want to have its own stablecoin, we'd love to help out however we can. Yeah, stop for questions. Happy to answer any.
So I went to grab some water. Did you explain the basics how oneUNI would function? Because I feel we have a lot of new listeners.
Yeah, I'll mention it again. I mentioned it briefly. So how the system works is that we create the contract for a oneUNI token and a minter and redeemer for that token. So anybody can go through the app to mint oneUNI. They would supply, say, 95 cents or 90 cents of USDC and 10 cents of UNI to mint $1 of oneUNI. That USDC would act as the collateral reserve, and the UNI would act as the community treasury, which is what can be used to either ensure sufficient collateral is there for 100% redemption of all oneUNI, as well as in different yield generating incentives through those strategies I mentioned. The contracts enable things like that oneUNI governance, so that oneUNI holders can participate in governance of their shared treasury. We've also even looked at potentially if there's a way to count oneUNI in UNI governance voting, but that's a much bigger question. But that's a bit of how the system works.
Yeah, well, basically DAI right now, I think it's 60 or 70% USDC, something like that. So oneUNI would be a little more USDC, but it seems like a lot of stable coins are heavily relying on USDC to keep their stability.
Yeah, so any could be used, whether it's USDC, USDT, or another stable coin, that the deploying party elects to trust. But long term, it could replace with, a central bank digital currency, or more importantly, because we think the value of these community tokens are just going to continue to appreciate, they could become so massively over collateralized that you're able to significantly reduce their reliance on the USDC. So for instance, Bancor is providing initial liquidity along with our community to that stablecoin, so that it's a lower minting ratio at the start.
Yeah, well, when the markets are not certain, then people tend to use USDC more, and if prices of altcoins go up, then they rely on those altcoins more, creating the stability of a stable coin.
Right. And especially when there's also so many yield opportunities, like we heard kind of earlier on the call, community governance can actually be profitable for those communities to, create that virtuous cycle of more valuable community treasuries, creating more incentives that they spend on use of that stablecoin.
Yeah, there will definitely be a benefit for Uniswap to have its own stablecoin, both for the governance and more pairs in the end on the platform itself. So yeah, what do you guys need in order to launch the oneUNI?
Like I said, it's hopefully just some support from a liquidity perspective. Whether it's from the community here or through grants. We've seen a model where we get a grant as kind of a zero interest loan to bootstrap into the community treasury and lower the minting ratio. So that's, I think, something that's definitely helpful. But our plan is to launch it in maybe 4 weeks or so, just because we've got a few launches coming up over the next 2-3 weeks. But yeah, would love if anybody wants to reach out to learn how to support or work with. We're happy to discuss any ideas.
So in theory, you can launch it yourself, but then you kind of depend on the holders of UNI token to start minting oneUNI in order to make sense.
Yeah, exactly. And like I said, the support through those grants programs for whether it's liquidity rewards or to deposit to the initial contract so you can lower the minting ratio is what's also really helpful. So that's what we have for we're launching with one-inch tomorrow with joint liquidity rewards from their team, which will really, I think, help that launch.
Yeah, well, next on the agenda, we have Uniswap Grant Program next steps. And I know you guys reached out to the Uniswap Grant Program and you talked to Ken, I think, if I'm not mistaken. So I think Ken has some kind of a plan for you guys. But yeah, next topic on the agenda will reveal what's currently holding back moving forward for sure.
Cool. Well, thanks everybody for the time, and we dropped our links in the agenda and text chat. So feel free to DM me on Discord if you want, or just reach out through our Telegram. Thanks.
Thank you for updating us. We really appreciate regular updates on projects that are building stuff related to Uniswap or stuff that can benefit Uniswap as a project. And yeah, thank you again for joining our call.
Thanks.
Okay, so next on the agenda is the Uniswap Grant Program next steps. We had a lot of people joining our Discord asking about what's going on with the grants, that they sent their submission and maybe didn't receive a reply right now. So we'll just give a brief update on the current state of the Uniswap Grant Program and what are the next steps for it. Unfortunately, we lost Ken. He had to go. This community call took a little longer time, so we don't have him. But yeah, if you're following the work of the Uniswap Grant Program, maybe you saw the latest blog post that essentially said that initial approved funds, so I believe it was $1.5 million in UNI tokens. All the funds were awarded to the grantees, and currently Uniswap Grant Program doesn't have any more funds to award to the grantees. However, there is a plan to ask governance for more funds, so Uniswap Grant Program can continue its work, and hopefully we should see that soon. So if you sent your grant proposal, in the past week or two. It didn't go to the trash. It's just that the program is currently on hold. And once, hopefully, Uniswap Grant Program gets more funds, the grants will continue and the application will continue to get processed. So that's the update for the Uniswap Grant Program. Anybody has any questions? Yeah. If you are an individual contributor, have some cool ideas, or would like to contribute to Uniswap community or project or whatever, a subcommittee which is part of the Uniswap Grant Program called the Stable still has some funds to award. I'll share the link where you can send your submission, and we'll be more than happy to hear your ideas. Yeah, you'll be able to find the link to a form in the text chat. Okay, this is just a simple update. And for the last topic on the agenda, we have the future development of Uniswap protocol. Interesting situation with the development of Uniswap protocol is that up until 2 months ago, everybody knew that Uniswap core team was working on V3. Everybody was waiting for the V3 launch, very excited for it. And now that we have the V3, the big question is, where do we go next? We could see on Twitter from Hayden that there is no plan for the Uniswap v4. Core team doesn't, have ideas how to improve the current state of Uniswap further at the moment. So the question is how we can develop the protocol and the project further. Obviously, some improvements for the documentation and different dev tools are obvious next steps. But yeah, what do you guys think? How can we further improve Uniswap as a project and as a protocol?
There was some talk about getting it on Arbitrum, and
we don't have any ideas right now.
Can you hear me? I guess my mic doesn't work.
Maybe Hitrunk, if you're still here and not AFK, can maybe share some of his ideas about further development of Uniswap. Nope. Okay, so yeah, if you something in the text chat. No, I can't hear you, ubik. You'll maybe have to rejoin. Maybe it's on my end.
Is our audio out again?
I just heard briefly, but then it died again.
Are you able to hear me now?
Yeah, now I can hear you.
Strange. I was asking about Arbitrum and support on layer 2, sorry.
So yeah, Arbitrum, I think Uniswap team is mostly done with their part, but the issue right now is that Arbitrum is not publicly available yet. So we'll have to wait for Arbitrum to become publicly available. I'm sure Uniswap team will not, launch it until everybody can just come and use Uniswap on Arbitrum. But yeah, different L2 deployments for sure. We kind of forgot about Optimism. So once Optimism is ready, they'll definitely work on launching Uniswap on Optimism.
The only other improvements I could think of would be like getting into more traditional finance stuff like stocks and options. I know Mirror and Alchemix and all these other ones, if I get the names right, are kind of doing some of these collateralized debt obligation things. That might be interesting to play around with or something of that nature.
Yeah, definitely. Crypto traders tend to take bigger risks, love their leverage. So some support for those traders would for sure be a potential next step. Not sure how that would be implemented into the V3 or Uniswap, but if it's possible, definitely something to think about. What do you guys think about making? So right now, Uniswap app basically just allows you to swap tokens, but sometimes when I'm using it, I feel like I'm kind of missing some information. For example, I'd like to see the graph in the same window, maybe some trading metrics like a volume. Right now, you have to basically must have two tabs open. One tab, info.uniswap, where you can see all the trades and the graph, and then in another tab, an interface of the app, so you can make a swap when you think it's the right time.
You said you had to open up two tabs? I'm sorry, I didn't understand.
Yeah, so when you're making a swap currently on the app, all you see is basically an input and the output token, but you don't have a graph or past trades or volume or anything of those sorts on that page.
Yeah, that would be cool. And like maybe comparison to other exchanges or something like that.
Yeah, and definitely like minor upgrades to the app interface. So for example, you can see the gas. When gas is really volatile, you have to have the third tab open to some of the gas stations so you can see what's the current price of gas.
Yeah, that'd be cool.
Okay, great. Those are some of the ideas. Thank you all for joining our fourth community call. Again, it was one of the longer ones. With all the interruptions, I'd say it lasted for over 2 hours. Ubik, I know you recorded, so you'll share the recording with me. I'll start the community call YouTube channel and share all the recordings there. And on Monday Monday, I'll open a dedicated text channel for the 5th community call and post a form there. So leave suggestions for the agenda. And yeah, next community call, June 14th. Would love to have you all there once again. Thank you all.
Thank you.